Bitcoin recently achieved a massive milestone of breaking above $48,000. So let's dive into the charts to talk about the short time frame trend lines and the strength of the market as we move into our next level of resistance. Welcome back to the channel, guys. If you're new here, hi, my name is Jess, and as the channel name suggests, it's all about crypto, trading, and technical analysis. So if you're all about that or you'd love to learn, hit the like button and subscribe to the channel. So diving right into the weekly chart, we can see here that we finally had that weekly candle close above 48K. So we haven't had a weekly candle close above 48K since December 2021. So it's definitely a big move for Bitcoin. And as discussed in my last video, we moved pretty much immediately to that next level of resistance. So that is between $50,000 and $52,000. You can see here, even on the weekly chart, we are starting to reject a little bit just from that 50K level. And we did have CPI data come out last night. So inflation data, and it did come out a little bit higher than expected. So as we move into periods where we are expecting interest rate cuts, meaning that we're expecting or we're aiming for inflation to be lower, having that higher inflation does mean that we are likely to get those cuts later than we are expecting or hoping for. So naturally that is bearish for the risk asset market, Bitcoin included. And we did see a reaction from that. So that drop from $50,000 was, I think, mostly caused by that. If you have a look at the 1 hour chart, you can see that as we were approaching a 50K level, we weren't exactly going down. We were actually starting to gain a little bit of strength. We were getting those higher lows as we were testing 50K and just trying to break through that level. But upon that news release at around 11:30 at night, my time, we did get a little bit of a crash. However, it is really good to see that after that crash, we still managed to find support above that $48,000 level. So it's just showing us that we are starting to get those signs that we're able to flip that 48K level of resistance to a level of support, which is really good to see because as we know, if we do manage to break below $48,000 before properly testing that 50 to 52K range, it does kind of tell us that it might be a deviation and we will continue downwards. But that's not what we're seeing here. What we're seeing here is actually really good. We broke above 48K here, and as we were trying to get that weekly candle close, we stayed right above that 48K level and we're holding it as a pretty strong level of support here. And then again, even after this negative news release, we did have that support level just above $48,000. So if you take a closer look at this level of consolidation here, you can actually see that this range here is what provided the support for that crash. It also coincides really well with our POC level on the VRPV, meaning that, this POC level is the level of the most volume on this little short time frame chart. So when we have a POC level, generally when we remain above that POC level, it is a good sign that when we're tracking upwards. And then as we approach that POC level and break below it, it's kind of signs for bearish reversal, so a reversal back downwards. So just a level to keep an eye on for sure, this level of resistance and that POC level. So if we zoom out just a little bit on the 1 hour chart, we can also see that the rejection from $50,000 went on to actually become our third validation point for this short time frame uptrend. While we're in this uptrend, there's literally no reason to assume that we're just going to suddenly go downwards. So while we're in the uptrend, we're going to continue going up. So until we break it at some point over here, if we do break it, then it would make sense for us to kind of think, okay, well, where are we going to retrace to? Where is that reversal going to be to? But until we see that, we're going to continue upwards. And actually, if you zoom out a little bit and you just take a look at the chart, it's looking really, really bullish. Hey guys, I'm just really quickly interrupting this video to tell you that my VIP channel has officially launched. VIP is a Telegram-based channel that gives you exclusive access to my personal trades, at least 3 of them a week, with exact entry points, stop losses and targets, detailed trade justifications and risk returns, and a complimentary risk management and trading journal. In the last 3 months, I took 70 trades in total with a win rate of 74% and a profit to loss ratio of 6.8 to 1. You can find all the results of my last 3 months of trading on my website, justdoescrypto.com, including profits and losses, and contact me down below using the link in my description or by pressing this button on my website. Thanks guys, let's get back to the video. What I'm specifically talking about is these 2 points in this uptrend. So we have this point of, sideways chop, and we have this point over here at $50,000 when we're trying to test that level of resistance. Both times we had periods where there was a potential for the price to reverse back downwards. There was a potential here for the bears to take control and for us to finally lose that bullish strength that was pushing us upwards. So if you have a look at the RSI, for example, at both these points in time along this uptrend, we had decreasing momentum and decreasing strength. in the uptrend. Let's draw in that next one. So what we can see here is that both points in this uptrend, when we were starting to lose strength and we were starting to lose momentum, we were actually absorbing all of that and then continuing upwards. So obviously here we had that negative news, but let's talk about what we see here first. So over here on the RSI, we've got lower lows and lower highs. However, on the price, we've actually just got sideways chop. We weren't seeing lower lows. So if we were, I guess, seeing that, it would show us that alongside this decreasing momentum and this decreasing strength, we were also actually losing purchasing strength in the actual price itself. If we saw, something like that, it wouldn't have been very good either, because it would just be an overextension, overinflation, and then eventually at some point we would get a really big reversal back towards that base. But we didn't see either of those things. What we saw was actually really healthy chop and consolidation as we moved to absorb the bearish strength that we were trying to get at these points in time. Again, over here, when we were testing that $50,000 level of resistance, as you'd expect, we started to slow down a little bit, right? As we approach a level of resistance. So we started to lose strength, we started to lose momentum, but over here, instead of going downwards and forming those lower lows and lower highs, we actually formed higher lows. We actually started to gain strength against this level of resistance. So as we were testing $50,000, the sell wall that was happening at this level was unable to push the price downwards until obviously that inflation data came out. So this uptrend is actually looking very, very strong. And if we continue within this uptrend and we continue testing this $50,000 level of resistance, what will start to form is an ascending triangle formation. So that's when we have a horizontal level of resistance, and then we have, higher lows. So what that suggests is every time we're trying to push past this sell wall, the bearish strength that we're getting here is decreasing, and it's pushing the price less low each time. And every single time we have that bounce back upwards, we're starting to, absorb this sell wall. And eventually, after a couple retests, we have a move upwards past that horizontal level of resistance. So the measured move of an ascending triangle is from the second retest. So over here we have that second retest of $50,000 down to the bottom of the trend line. So that is around something like that. And if we pull that above over here, anywhere along this horizontal level of resistance, we can see that it takes us just slightly above $52,000. If we zoom out just a little bit onto a 12-hour chart, we can see the last time we formed an ascending triangle formation while testing a macro level of resistance, we actually had a huge break above. The last time I remember that happening is when we were breaking above that $38,000 to $40,000 level. I think I made a video about it then as well, and you can see it pretty easily here. So we've got $38,000. That is a very clear level of horizontal resistance. And then over here, we've got higher lows. And after 4 retests of that $38,000 level, we finally had that breakthrough, and that measured move for this one was huge. It took us all the way above $40,000. And when we broke above $40,000, obviously that resulted in an even bigger breakout, and we started to test that next level of resistance at 44.2 to 44.8. On the flip side, if we do lose this short time frame uptrend, there are a couple levels of support to look out for. So let's quickly talk about those. On the short time frame, obviously we have the top of this range here. So that is at $48,600. Just below that, we have our POC level, which is a huge level of volume. So obviously it acts as a very strong level of support. If we are going to get buy orders to push us back upwards, that will be a really key area to look out for. Just below that, however, we do have $47,000. So if we zoom out just a little bit onto the 4-hour chart, you can see how important that level is. When we originally broke to test $48,000 in January, $47,000 was a really strong level of resistance. As you can see here on the 4-hour chart, we really struggled to find a candle close above it. And it was this time here at that candle close above 47 that kind of confirmed that we were going to go upwards and really test that $48,000 levels and above. So $47,000 is that next level of support. And then obviously the start of this entire macro level of resistance starts at $46,000. So that is another key level to look out for. If we zoom out just a little bit further onto a daily chart, we can also see that we are in a larger uptrend. So we have a short time frame uptrend, yes, but we have an even bigger one that started at the base of our correction at $38,500. So if we lose that short-term frame uptrend, we are still technically looking quite bullish until we lose this even larger macro uptrend. Taking a look at this daily uptrend, there are two main scenarios that I can see playing out over the next couple of days to weeks. So the very first scenario is slightly more, I guess, bearish. So that first scenario is if we lose this short-time frame uptrend. So if we lose this uptrend before creating that ascending triangle formation and testing $52,000, and we lose these short time frame levels of support, so at that top of the range and that POC level, we would move to test these levels here. So these levels here at $46,000 and $47,000 coincide really well with this daily uptrend. So there is a potential that we lose this short time frame uptrend, lose those shorter time frame levels of support, and go to test either $47,000 or $46,000. The second scenario that I see potentially happening is, I think, slightly more likely. So we have this short time frame uptrend and we have a horizontal level of resistance. What I see happening most likely is we get that breakthrough of $52,000. We go to test this level, but upon $52,000, we might get a rejection downwards. And upon that rejection, that is when I see us retesting this major trend line here. So at $52,000, we might get a test back downwards to test $48,000 as a level of support. If we zoom out just a little bit onto a weekly chart, we can see that historically that is typically what happens. So over here, we have a weekly candle close above $48,000. We go to test $50,000, go slightly above $50,000, and then we go back downwards for the next week, and we test $46,000 to $48,000 as a base of support. Same thing over here, we actually touched $52,000 this time, but again, we go back down to test $48,000 to $46,000 as a base of support. So the reason why I don't expect us to go to $52,000 and then go, exponentially beyond that is because in order to see that move, we need a monthly candle close above $48,000. So I think I've already talked about this many times in my videos, and I've already talked about it heaps in my Telegram channel, so I don't want to go over it too much. But until we see that monthly candle close in 2 whole weeks away, we shouldn't really be expecting a huge move above $52,000. If we go higher, naturally, the next move would be to test the next level of resistance, and that is all the way up at $58,000. So that would mean that after $52,000, we would go up 10%, 11% to $57,600, and then after that, potentially another like 6% to $60,000. And that just to me sounds a little like bull run behavior, and we're not quite there yet. So I think 52K is a very, very solid target. And then after that, I would expect some pretty strong pullback to test $48,000 as a level of support. Alright guys, that is everything from me today. If you enjoyed this short time frame update, don't forget to like and subscribe to the channel down below. And if you want to see more of my content, I do have a free Telegram where you can sign up for daily Bitcoin updates as well as crypto and economic news. If you're a trader and you want 15% off your trading fees, sign up down below to Bitget and BingX. They are 2 of the world's top 10 exchanges, and Bitget is available to everyone outside the US and Singapore, and BingX is available non-KYC and worldwide. I hope you guys have a great week, and I will see you next time. Bye!